Hey guys, welcome to the new channel. This is going to be a channel that's dedicated to documenting my day trades. I'm going to document my winning trades as well as my losing trades in hopes to just keep me accountable, and hopefully you guys can learn a thing or two, and you can learn a thing or two about what I do and then also what I avoid whenever I am trading. So this is episode one. The date of this recording is May 6th, 2020. The first trade we're actually going to get into is from May 1st, which was last Friday. The reason being is actually the first day trade that I have taken in almost 9 months. I've kind of taken a break from it to try to get just a clear head, fresh start, save some money, and really learn the markets and learn what I want to day trade, how I want to day trade. I think it's really important to stick to your rules. Don't over trade. So if there's a day that I get up and I open up my Thinkorswim platform, which is what you're looking at right now, and I don't take a trade, that's fine. Because I'm saving money by not losing money, which is always good. If you overtrade or you force a trade, you can find yourself in a deep hole, and then it's kind of a bad habit. And then if you do win on a trade that you kind of went against your rules, you're just reinforcing that habit, and eventually it's going to come back to bite you in the butt. So this is the first trade that I took in literally almost a year. It actually turned out very, very well. Um, yeah, we're just gonna get into it. So this is the Thinkorswim platform. If you've never seen it, I have it set up to where it best suits me. So I have my watch list right over here, and what I always do is I find the stocks that I want to invest in or I want to trade, and I put them in my watch list. I don't overcrowd it to where I'm not focused on too many. And then the next day, when I open up the markets, I already did my homework. I already know what potential trades that I want to take, right? And then I have my platform set up where it's pretty clean and cut, to where the only things that I have on here are the candlesticks to represent the price movement. And in this chart right here, this is a 1 day chart of Apple. So all these candlesticks are representing Apple's share price throughout May 1st. From market open, which is where the black begins, to market close, which is where the black ends. And obviously, this is after hours when the market's closed on Friday, and then the market's closed for Saturday and Sunday, and it opens back up on Monday. All right. So then I have the VWAP right here, which is this purple line, and that stands for the volume weighted average price. And this is really what I like to use to take my trades. The reason being is I have been really looking at the VWAP and how it interacts with the stock price, and specifically Apple. And I find that it tends to act as support to the upside for when the price is going up, and then it acts as resistance to the downside. So I like to use this as a indicator of when to take a trade and then when to close a trade out. And I also like to pair that up with the volume, which is down here. If you guys look at my mouse, down here where this represents the volume. And all that means is that's how many shares trade hands. And the more shares that trade hands, so the more shares that are bought and sold, um, that is going to have a greater influence on the stock price. Whether that these bars are so high because many are buying the stock, it's going to go up. If the bars are very, very, very high and the share price is going down, it means less people are buying and more are selling the stock. And the reason why I like to trade in the beginning part of the day is because if you look at these bars, right, they're very high in the first hour to 2 hours that the market is open. And then as the day goes on, the bars start to shrink, right? And that means that there's less volume, to where um, the share price isn't going to be um, influenced as much. So that means the price swings aren't going to be that great. So if you want to make your money, you got to find your setup, and you got to wait till the volume is on your side, and usually the first half of the day, and that's when you take your trades. So That's what I did here with Apple on May 1st. Let's just get into the trade. So I bought, so when the market opened up at 9:30 Eastern time, I'll zoom in here so you guys can see the candlesticks. And just as a reminder, every stick represents a minute that the market is open. So this is 9:30, this is 9:31, this is 9:32, and so on until the market's closed. All right. So Apple was fairly strong, and this was on Friday. So the reason why I had Apple on my watch list is because I like the way the stock moves during the day. It's very clean. It's not super choppy back and forth. It usually finds its direction, and then it more often than not supports that throughout the day. So that's why I picked Apple, as well as I forgot to add this. They had their earnings on Thursday, the day prior, and their earnings were pretty good. So I knew that the momentum would be on my side, and there was a potential for some decent price swings when the market opened up because it was the first time the market was open since they reported their earnings. So what I ended up doing was I actually got in a little too soon. It was my first trade in 9 months. I'm not perfect, but I got in a little too soon. I bought in right here, and what I did was I bought a 292.50 call option on Apple. So that's $292.50 with an expiration date of May 15th. Bought that at 9:39, right on this candle right here. Um, and I actually bought two of those contracts, which came to a total of $1,540. What I should have waited, which are my rules, is to wait until um, the VWAP acts as support or resistance, and I should have bought in around right here. But it's no biggie. Hindsight is 2020. It's the first trade that I took in a while, and it actually worked out for me. So I bought in right here, and my rule of thumb for when I sell is either three consecutive red sticks, which means the price is moving down, and the sellers have the momentum and all the pressure on the stock. So I'm not trying to hold the bag and wait for it to bounce back up, and the next thing I know, my $2,000 turns into 1,000 because I was greedy and I was stubborn. So I'll either sell if this if this if this third stick. I don't really count these as red, right? Like this, the price didn't move. This one, the price didn't move. But if there's three consecutive red sticks like this, I'm going to sell because that means that the price is drastically falling. As well as if the volume is very strong, then you need to get out. All right, so that's the first rule. The second rule is if the volume, or sorry, if the share price breaks the VWAP no longer acts as resistance, or it no longer acts as support, right? So now the share price would probably fall down here, bounce back up, get rejected by the VWAP, which is this purple line, and keep going down. So that's when I sell. If there's three consecutive red sticks, or if the VWAP is broken, if this line is broken. So it bounced off this line pretty well, and I went ahead and held the stock throughout the next 25 minutes. All right. I sold a little earlier than I should have. So Apple got up here to $296. And if you remember, I bought it at 292. And when I sold out, my contract was now in the money because my strike price was $292. So when the share price is 296, then my option is in the money because the strike price is below the share price. All right. So I should have held. I usually don't sell unless I have a reason to. If there's three red sticks or the VWAP breaks. But right here, it started to level off, and I saw a decent amount of profit. So I went ahead and sold. I could have held on for about an extra $250, but I'm happy with my profits. It was the first trade I've taken in 9 months, and from 9:39 a.m. to 10:04 in a matter of 25 minutes, I made $500. So I got more than 25% in this trade. which was great. So I sold out here at 10:04, and that contract that I originally bought at $770 was now worth 1,020. And remember, I bought two of them, so the total that I got paid out was $2,040, and I only bought in with 1,540. So that was a great first trade. Um, in hindsight, I should have waited until around in here once the VWAP supported the move, and then I should have sold out around in here once the price started to die out, or once the momentum started to die out. But it was a good trade. It was a good first trade. I hope you learned a thing or two, and I hope you enjoyed episode 1 of my trading journey.